Okay, so why don't we start off first with like what exactly is the ERC?
Yeah, so the ERC is the Employee Retention Credit. It was created back in 2020. At the same time that the PPP program was created, entirely separate program. It's a refundable payroll tax credit of up to $26,000 per employee. So tremendous value, often overlooked.
Okay, and of course the follow-up question, I think the one I had for you originally was like, is this real? It sounded too good to be true when you first told me about it before we started working together. I kind of believed like I got the PPP. That means I can't get the ERC. So like run people through like why I probably believe that, why it didn't seem real, and why it actually is.
Yeah, it is definitely real. It also sounds too good to be true. And there are a lot of people out there sending out flyers saying that it's available. It's up to $26,000. That does not mean that every company will get that amount for every single employee. And you have to be eligible in 2020 and in 2021 in order to get that maximum amount. In a lot of our clients' cases, we're seeing them get anywhere between $10,000 and $15,000 per employee, which is still significant, but it's not simply multiplying the number of employees by $26,000. It's likely going to be a little bit less than that. And one of the reasons why you may have overlooked it is because initially you could not get PPP if you got ERC. And Congress changed the rules later on and said, okay, you can get both programs. You just can't double dip on the forgiven payroll costs under PPP with ERC. So what we've done is build a really cool, I think, industry leading software to do that overlap analysis to maximize the ERC while fully allocating all the required payroll costs to the PPP program.
Okay, yeah, I mean, it was pretty wild for us. Like, I think you told us that we couldn't do it. We've got about 20 employees, at least stateside right now. But I think I'm trying to remember exactly the amount we had. We work with a lot of contractors, so it's always hard for me to keep track of like how many like true employees, because this doesn't work for contractors, right?
That's right. You're looking at W-2 employees to claim this credit.
Okay. So I think for us, like, I think we ended up getting, like, you told us about it, we filed for it, we got about 10,000 per employee, or maybe a little bit less. So we ended up with around $200,000. And then you came and joined us and said, let me do a look back, which we'll get into later. But you found us an additional like $108,000. So our total savings across the board was like $308,000. Or I say savings, it's legitimately a check we got from the government for $308,000. So that was pretty cool. And something kind of funny. We were hurt by COVID, of course, and so we did see our profits dip, but we still profited. So I think that's actually an interesting thing that needs to be like pointed out. You can still profit and get this. But our profits definitely dipped. But we took pretty much all of our ERC and we just bonused it to all of our employees, which is, like some people feel guilty about taking this sort of thing. But dude, I mean, your employees are important. Yeah, they're the ones that make.
You've hit on a number of really important points that maybe we can just break those down. One is, a lot of people are looking at their annual gross receipts and saying, okay, at the beginning of the pandemic, I didn't do that well, but business rebounded by the end of the year. So if I look at the total gross receipts, let's say from March 2020 through March 2021, I was flat or I did a little bit better than 2019. The reality is that this test is done quarterly, and a lot of businesses took a big hit in Q2 2020 when there were government orders and people weren't going out and engaging in commerce. And so if you had any quarter that declined, and we'll talk a little bit about what the specific parameters are a little bit later, but you're looking at this on a quarterly basis. The second thing is you can be eligible if your revenue didn't decline, but your operations were limited due to government orders, things like social distancing, capacity limitations, not being able to have indoor dining, do elective procedures, you name it. There were a lot of restrictions on different industries. And so there's people who think, well, my business didn't decline because I made up for it in other capacities. And the reality is you can be eligible under both the subjective government order test and under the gross receipts test. It's not a requirement that your gross receipts declined. So, I mean, talking about things that you did with the money, it is different than PPP, where you had prescribed limitations. You had to use it on payroll costs, mortgage interest, rent. For this program, you can actually use the money how you see fit. It truly is a refund of the payroll taxes that you paid to employees for employees' wages during the period you're eligible for the ERC.
Yeah, that goes right into the next question. I mean, you actually hit it already, but like business, like the quotation I've got here is like impacted by COVID can access the ERC. That's so gray. And I think that's what a lot of people's like fear is, and that kind of thing is like, yeah, what does impacted mean? You already went into that, but is there any more you can kind of share with us? I mean, you said the decline in gross receipts and then business impacted.
Yeah, I think there's been a lot of folks out there who think you have to be completely shut down in order to be eligible.
Yeah.
And that's not true.
Yeah.
The definition of partially suspended is full or partially suspended due to government orders limiting commerce, travel, or group meetings. And what the IRS has said about that definition is that it needs to be a more than nominal impact on the business. So if you have a grocery store and the only change you made was shutting down your self-service salad bar, probably not. If you have a restaurant and you were able to do, excuse me, curbside pickup, but you had to shut down the indoor dining piece of your operations, the IRS guidance says that that likely did have a more than nominal effect. And when we talk about more than nominal, we're looking generally for a greater than 10% impact. So it's always based on each taxpayer's facts and circumstances. There's not one solid answer, but it's important to have these discussions. And a lot of CPAs and accountants are willing to look at the gross receipts side of the test and say you either did or did not have a decline, but they're usually a little unwilling to engage in that discussion around partial suspension. So you may have left something on the table if you only looked at the quarters where you had a decline in receipts.
Cool. Yeah, I mean, like for instance, the brewery that we did, like they actually had one of their best months during COVID because of the beer to go sort of thing. But they had other quarters that were hit. So they had like this initial thought of like, I don't think we're going to qualify for this. And then we were able to actually save them a good bit of money.
Yep.
Okay. So, like, is there a minimum number of employees to qualify? I feel like that's something important, especially because of like a lot of small businesses just assume that a lot of these things are never for them. And a lot of times kind of aren't for them, but this one is.
Yeah, definitely. I've talked to a number of small businesses who said they were initially told they had to have more than 5 employees, which is not correct. I think in some cases it's because the provider that they talked to wanted to get a certain amount of fees out of each of their clients, and so they didn't want to engage with the small business. And the second reason is majority owners and their related individuals, so spouses or kids, if they're on payroll, those wages don't count. So in some cases, if you have less than 5 employees, you may not end up with much in the way of qualified wages if it's the owner and his family working at the company. But if the owner and her family is, makes up 3 employees and they have 2 others, well, the 2 others could generate a credit of up to $26,000 per employee. That's $52,000. So there are certainly no limitations on the number of employees. It's just in some cases it depends on who you talk to and whether they're willing to engage. We've done clients that have 1 employee and we're happy to help them.
Yep.
So.
Yeah, I mean, it is tough. Like it's not like I've been with you while you're working on those, and it's a lot of work for not a lot of money. But I think one of the important things is like we are also looking, like we're not just a pop-up shop. We're not doing just the ERC. So we're willing to work with these smaller companies And it's not as cost effective for sure, but the hope is that we'll build these relationships with these companies and then help them with further credits down the road. I don't know how much we want to get into the other credits, but I think it is important for people to know, like, we're not trying to just like be a one-time, you got to have this many employees because we're trying to maximize all the value out of you right off the bat. We are hoping that, tell them about the tips tax credit you were able to get that one company.
Yeah, to your point, we are in this for the long haul, trying to help small and medium-sized businesses with tax savings. And I think you should take a chance here in a minute to tell them about the 12 years you've been in business doing just that. But we want to be around. We want to help with the ERC, but there's other credits out there. So, for example, one of our restaurant clients, we helped them with the ERC. They had actually used their payroll provider who only did the ERC for one of the quarters. Turns out they were eligible for multiple other quarters. So we helped them with that. And then I just asked if they were taking advantage of the Section 45B FICA tips credit, which is an income tax credit.
That just rolls off the tongue, doesn't it?
It sure does. It is a credit on the payroll taxes that you pay on tips that your employees receive. And you might ask, why are you getting a credit for the payroll taxes on the tips? And it's because the IRS wants to encourage waiters and wait staff to report the tips they receive so that the employer pays payroll taxes. If they keep all of the tips in their pocket and go home and never tell anybody, that means the IRS doesn't get payroll tax revenue. So the goal is to encourage reporting through this tax credit. And in this case, the ERC for the client was, I think, about $30,000. And when you do the look back over the last 2 years and the current year for the FICA tips credit, it's an additional 30,000. So those are the kinds of things that we love to work on, spot additional value. And they have a very small employee base now, but in a couple of years, we hope they grow, rebound from the pandemic, and we can help them with other stuff in the future.
Let's go back and hit kind of our history and what we've done and why it works well for us. So I'll kind of start. So we started Resolute Property Tax Solutions, I think, or 12 years ago. We started in 2010 was when we formed. Our first invoice we sent out was May of 2011. So, choose whichever one you want to call like the inception date of the company. But Resolute Property Tax Solutions, we started off with, we picked up about 900 residential properties. And our goal was always to start a commercial property tax consulting firm. It's a lot more lucrative. And residential can just be a bit of a beatdown. But we said that after we started off with 900 accounts we brought in through various marketing techniques. And that was great. And the goal was to get to 6,000 residential accounts and then never market to another residential account ever again. And 12 years later or 11 years later, depending on how you look at it, we now have about 68,000 residential properties that we represent. We do have a commercial business, which has been great. And, there's a lot of reasons why we're happy to have that business and wanting to see it grow. But what we were able to find is the more we would automate, the more we got really into software development pretty quickly early on. And so we were able to speed up the pace at which we could work those accounts and speed up the accuracy. So right now, we built a tool that we've probably, we've invested a few million in at this point. And it allows us to work an account to the highest quality, and probably 10% of the time that our competitors are working that account to maybe the same quality as us, but a lot of times that's not even the case. So where a lot of these other companies are only going after high dollar, only going after commercial, we started going after $150,000, $200,000 rental properties, or just, low value properties around Dallas. We picked up tons of them. We stuck with those people. A lot of those people became investors. And a lot of people grew and have been with us for, years and years and years. So we were able to figure out there was a way for us to make money while also bringing a quality of service to these, what you would call, for lack of a better word, like a lower end sort of client. But we could bring like the quality of service that you would get if you were a higher end or commercial client. And that's what we're kind of trying to do here too. And why don't you like tell us about your experience at EY, what you were doing, who you were working with, and how that kind of mirrors our vision for our property tax firm.
Yeah, I think it's a great story. And I just make a note that Resolute Tax Credit Services did start last September, but we've leveraged a lot of your experience and a similar philosophy. And so we've, 12 years of experience saving taxpayers money. My experience is that I am an attorney, graduated from Pepperdine University, and then started working at Ernst & Young out of school, doing tax credits and incentives. And over the years have helped create new software for new tax regulations like the Affordable Care Act, new tax credits that come out like past employee retention credits for disaster zones, work opportunity tax credit, any new credit, you name it. I was on the front lines of trying to figure it out, determine if there's an opportunity and who would actually be eligible for it. And then the pandemic hit and a lot of things changed. And we pretty much exclusively focused over the last couple of years on the ERC. And we were doing ERC for the biggest of the big companies, nationwide employers, tens of millions of dollars. And what we found is, even amongst the groups that have tax departments, it's still really, really complex. And talking to you, we learned that there's still some miscommunication, misinformation about who's actually eligible. And if you think a full tax department at a client can't figure it out, just imagine what kind of information the small mom and pop shops are getting. It really was borne out right when I started talking to you before we joined as partners for Resolute Tax Credits, that you can't actually get both of these programs. You didn't know it. And so I think there's really a case study here with what y'all have built. And it's really borne out in the conversations that we've had. Using your experience on the technology side, building technology that helps streamline the property tax piece, plus my experience with the ERC, helping hundreds of clients, drafting up position papers, providing feedback to our lobbyists about what program and enhancements we should make. All of that experience together has been funneled into the ERC software that we've built, which is super cool. I do think that it's industry leading, takes the payroll data, it provides employee by employee breakdown of how much was allocated to the employees, how much was allocated to PPP. And so our experience together, knowledge and technology has been huge. And I usually don't toot my own horn, but I do think that it is a CPA trusted technology that is leading the way, making sure that we're maximizing the ERC and minimizing risk.
Yeah, I think that, you said you think it's industry leading. I think we've got a pretty good indication it is, because there are other industry leaders that are trying to license it from us. Because this isn't a easy thing to do. And I mean, the biggest thing that we found is that they're really struggling with PPP overlap, which means they're leaving a significant amount of money on the table for their clients.
Yeah, the technology that was built to handle the really large companies doesn't necessarily work for the small employers, because the big guys didn't get PPP loans. They have their own set of issues. Yes, it's complicated. Yes, the technology works. But when you're talking about small businesses that have PPP loans, if you're removing the entire PPP period from ERC eligibility, you're really leaving a lot of value on the table. So that's one piece of why I think our software is really cool. The second reason is that we have built a tool that allows you to auto-populate the 941X. which is the mechanism to claim the actual credit. And in talking to other providers, we found that they really struggle with their own employees making errors on which line needs to be filled out, the amount that needs to be entered. And so having a tool that allows you to automate the IRS 941X worksheet and produce the form saves time and minimizes the risk that you've provided the IRS with the wrong information.
Yeah, and I think one thing to point out right now, for if any CPAs see this or considering, we have not decided to do it just yet, but we are hoping that they'll reach out to us. So we want to see if there's a market for us. People trust their CPAs, like people trust their accountants. And this is an important tax credit that a lot of people like are a little wary of, because there are some ERC pop-up shops that are just maximizing the credits, getting everybody $26,000 per employee. And then, I mean, it's just kind of like a moral hazard sort of situation. They're like, we're gonna bill all these people, we're gonna get in trouble, we're gonna settle with the government, walk away. But that's gonna leave a lot of their clients pretty screwed. And so
Yep.
we're not doing that. So if you are looking to stick one to the government, we are not the company to go with. If you are looking to maximize the tax credit within the law, then we are the company to go with. And we will make you aware of how you could stick it to the government if you really want to, and then tell you that we are not interested in working with you anymore. So, we understand, like, people should be able to make their own decisions. That is not our job. So it's our job to stay within the legal boundaries and to help people get as much as they legally can from the government. Because I mean, I own a business. Like, I lost a lot of money. Like, there was one day where I literally lost a lot of money because of the government orders. Like, I mean, I know the dollar figure and I don't want to say it, but it was not insignificant. And so, like, the fact that these enormous companies are getting these tax credits, your competitors are getting these tax credits, you should feel just fine getting these tax credits and investing in their company. And if you feel bad about it, donate it to your church, donate it to the ASPCA, give it to your kids. I don't care what you do with it, but you should get it. I think is one of the
and I would say, as we're talking about what we're not doing at our firm, one example would be, if the only impact you had from a government order is that your customers had to wear face masks inside, we're not going to help you with that. But there is 107 pages of guidance in an IRS notice explaining the different things that could qualify you, and that doesn't address every single fact pattern, but it provides a pretty good roadmap of how to compare that example to what your business may have experienced. So we'll work with you, we'll lay out the risk. I think everything is on a spectrum. The most black and white is if your gross receipts declined. It gets more gray as you experience shutdowns. And in some cases, a seemingly harmless operational change, like maybe staggered shifts, could have really had a huge impact on your business if you had to shut down the machines in between each shift and leave a window of time in between to clean. Those are the types of things that can actually impact your business. Now, we would want to look at key performance indicators to see how that actually impacted your output, but it's worth looking into. And if we feel like it is something that fits within the parameters of what the IRS has said is a partial suspension, then we'll let you know that, and it'll be your decision to claim it. We'll never pressure you into moving forward. That said, I do think as you're being inundated with flyers and brochures about other ERC providers, there's a few things that you should be looking out for.
Okay, so we talked about earlier, there are some pop-up shops that are out there that, we don't know exactly how they're running their business, but it does feel a little bit like they're going to maximize these credits as much as they possibly can, bill you as much as they can, and then just settle their lawsuits. That is not what we are hoping to do. But that's definitely not, I need to be stronger than that. It's not what we're hoping to do. That's not what we're going to do. We were hoping to never get sued. I don't think my stress levels could take it. But so with these other pop-up shops, if you are going to call other people other than us and talk to them, and you should, first of all, we encourage you, call us, give us all your questions, scrutinize us. We are ready. I mean, and I'm taking too long to get into this, but if you're going to call some of the other ERC shops that are out there, give us some questions you can ask them to evaluate whether they are the real deal, or a pop-up shop that is going to just maximize the credit and kind of leave you flailing at the end.
Yeah, I think the first question is, what experience do they have with the ERC? And beyond that, tax credits in general. There's other wage-based credits that don't have the same rules, but have a lot of the same principles. And so my years of experience working on those before the ERC came out really educated my interpretation of the ERC rules once the IRS issued guidance. So that's the first thing. And, I'll tell you, when I talk to a couple of clients, they say, hey, I really need you to talk to my CPA to get them comfortable before we proceed. And just a funny anecdote, and one of those, I talked to a CPA who's been in business for over 40 years. And he started off the call saying, hey, that is a really big number you threw out. No hello, no, opening icebreaker or anything. And after 30 minutes, he was telling me about his college experience back in the 1960s. He felt very comfortable talking to me. Yeah. And he's now referred a few other clients to me. So it is really important to make sure that they know what they're doing, that they've done these before. And we'll get to one of the reasons that's important in a second. But the second reason, ERC specific reason is, or question that you should ask is, how are they going to work with you during this process? Unfortunately, what I've seen is these providers send a contract out and then ask for some information. And the next time you hear from them, they've sent an invoice with a credit number with no explanation of how they got to that number, how they calculated it, how they determined you were eligible for, all 6 quarters and maximize the credit, which is very uneasy for, these small mom and pop shops who are fearful that it could lead to an audit. And if they get audited, that they won't have any documentation. So make sure it's not a black box, make sure that they'll work with you, explain the rationale. What we do at Resolute is we do a upfront phase 1 free of charge, review your eligibility, give you an estimate, help you make sure that you're comfortable proceeding. And if you are, then we move to phase 2, which is actually calculating the credit. So at no point should you feel that you don't know what's going on, or you don't know the potential value, or you don't know why you're eligible. And the third thing is, you should ask what their plan is if you are actually audited. Are they going to be around in a few years when the IRS audits this? If they're not, that's a separate issue entirely. And you really need to make sure that they're going to be able to help you. But making sure they provide documentation, ERC credit report showing you all the wages and credit by employee, a methodology memo that explains how they determined you were eligible, and then the 941X is either a pro forma or the actual form. Keeping all those things tightly wrapped up in a file in case you get audited over the next couple of years by the IRS.
So, hey, let's just, so that people, if give me the TLDR version of that, so again, so real fast, just if I wanted to call one of these companies and really kick the tires on them, let me say this, if I wanted to call one of these ERC providers that I got marketed to by a mailer or saw them online, and I wanted to kick the tires to see if they're a legitimate shop, what are a few questions I could ask them in order to evaluate whether there's somebody I want to work with?
Yeah, I think three things. First one is, what experience do they have with ERC and other wage-based credits? Hopefully they haven't just started business yesterday. In our case, I've got over 10 years of experience with tax credits and led the tax credits practice at EY. The second thing is asking them how they're going to work with you during the process and to get you comfortable that you actually are eligible. Some clients are getting the initial contract and then they're getting the invoice with no explanation of how they actually arrived at the credit amount. And then the third is asking what their plan is if you get audited. Are they going to be around in 2 years? And what will they deliver to you at the conclusion of the project? They should be giving you a credit report showing everyone's wages and credit by employee, a methodology memo explaining their rationale, and at least 941X pro formas so that they can see how you can see how they've prepared the forms that will be going to the IRS.
Yeah, cool. Well, I should do that for other people right now on their behalf. So I'll be cynical on their behalf to you. So answer those three questions for me. If you're an ERC shop, you're a tax credit shop, answer those questions. What experience do you have with tax credits?
Yeah, so I led the tax credits practice over the last couple of years at EY, and when the ERC came out, I was one of the first people to really digest all 107 pages of the guidance. Led the team that built the ERC technology, and even before COVID hit, led the team that built the technology for other employee retention credits. So tons of experience. I'm based in DC, and one of the reasons why I moved from Dallas to DC was to be on the front lines of tax credit policy making. And so I worked over the last couple of years with our lobbyists and connections in DC to provide suggestions on how to enhance these programs and make them more accessible. On the question about what we're going to do with you if you work with us, we do our engagements in two phases. First phase is collecting information, estimating the credit, and then providing a high-level overview of why we think you're eligible and for how long. And we give you a chance to make a go, no-go decision. If you don't feel comfortable or it's not enough of a refund to be worth your while, you are free to say, you know what, I'm going to pass. At that point, if you decide to move forward with us, we'll calculate the credit, prepare the forms for you, and then file it and give you a full report that shows our process for determining your eligibility, for calculating the credit, the actual forms, and we'll be around hopefully for decades doing tax credits. It's not the sexiest line of business, but we do think there's an opportunity to help small mom and pop shops. So we won't be going anywhere. And if you do get audited,
just small mom and pop shops. Not just small mom and pop shops. Well, yeah, we want to focus on small and medium-sized companies. I mean, we've done 100 companies with 100 employees.
That's right. Right. So the point is, we'll be around. I have experience defending audits on other credits with the IRS, and I'm familiar with the types of questions that they'll be asking about the ERC if you do get selected for an audit. And so feel very comfortable that our process and our deliverables will put you in really good shape in order to actually receive and keep the refunds that you're eligible for under this program.
Nice. Cool. There was one more question I wanted to ask. I know I wanted to get to the three questions. One thing I wanted to kind of point out is that why this company is important to me and important to you. I mean, you are working on these massive tax credits for these massive companies. We are, I don't know, we'll see what happens. I don't know if we'll ever be, handling multinational corporations. I don't know if we're ever going to have a client that has over 500, employees. But, my dad was in, a small businessman, like very small, like him and a couple other people at most. I started my own business when I was 23 and I've been doing that 35 now. And like, it's really important to me to help out these small businesses. I think people don't realize this, but we have less small businesses in this country than we did in like 1950. And part of the reason for that is like, it's become so complex to own a business. Like there's all these softwares out there. There's all these tax credits. I mean, there are whole people that start businesses because of tax credits. And those guys aren't guys like me, they're not 23-year-olds fresh out of college trying to, build something. Those are people with a pretty nuanced understanding of these laws. So we kind of want to help restore that. We want to help these small businesses thrive and grow and go from 5 employees to 50 employees. Because especially when you own a small bit, like I have 40 employees. And I know them, and I will pretty much be on the phone with we've got, some of them are in the Philippines, some of them are in the US, but I will have a personal phone call with all of them. And so I think it's really important from just I think some of the happiest employees out there are the ones that are in these companies that are like, 5, 10, 15, 20, up to 100 employees. And I want to help those businesses maintain, stay around, grow, so that they can help, create these really like beautiful lives for their employees. So that's something that's really important to me. And I think, you've worked on these massive tax credits. I mean, these are they just get added to the bottom line,
Yeah. And there's other programs out there. Like you said, there are big companies who have whole teams working on this and have the knowledge base to do it. I really want to help the smaller companies do this, access the money that's been made available to them, and to help them grow. There's other credits like the Work Opportunity Tax Credit, which I'm really passionate about, helping people who are hard to hire get into the workforce. And so a lot of these programs are well-intentioned, but the information out there isn't very good. And small businesses, medium-sized businesses don't have time necessarily to monitor all that's going on and keep their business afloat. And so what we're trying to do is provide
the research and development, the R&D tax credit. I mean, like I said, I've spent millions developing our software, and we just recently started getting to take the R&D tax credit. We just didn't even know about it, didn't even exist to us. And like that money could have been helping us all along. So sorry to jump in, but yeah.
Yeah, so that's the goal. But going back to when you're deciding on an ERC provider, one thing that is coming up a lot now is that time is running out. And I just want to clarify. Really good point. I want to clarify that there is a deadline. It's not tomorrow. Yesterday, I was on the phone with someone who was being told by a potential ERC provider that they had to make a decision yesterday. The deadlines are April 15th, 2024 for the 2020 ERC and April 15th, 2025 for the 2021 ERC. So what does that mean? It does not mean that I'm encouraging you to wait. You want to get in line and get this processed. Memories fade, documents go away. If you wait till a year from now, you may not have any documentation that your receipts declined or that you were partially suspended. It's already been 3 years almost since March 2020 when the pandemic hit. And talking to people about what transpired back then is hard. It was emotional for small businesses, and a lot of people have blocked it out. But what it does mean is that you have time to do your due diligence, to ask those questions of the potential ERC providers, to get comfortable with what they're telling you before you file. So if you're under pressure to choose a provider, to file something, especially something that seems way larger than what you thought you were going to get, just know that you have time. Get a second opinion from somebody. And even if you decide to move forward with a provider or you've already claimed it, there's no harm in going to ask another provider like Resolute to say, hey, I filed this last year. I don't know what they did. Can you take a look at it? You have time to do that too. And in your case, on day one, you had already filed the claim. And I looked back and determined that, oh, you told your payroll provider when you were eligible, they didn't help you determine your eligibility at all. Well, it turned out that you looked at the quarter in which your gross receipts declined. You didn't know about the prior quarter safe harbor election, which meant you were eligible for a whole nother quarter. And so both on the front end, if you're just about to file an original claim, make sure you feel comfortable with what's about to be filed. And if you've already filed, you have another year or 2 years to work with someone to say, hey, I just want to make sure I got everything that I was due.
And that's something we do, and we do for a percentage. Like there's no upfront cost to that. It's a higher percentage because, I mean, the other guys you hired took a lot of the income there. So it's a little bit higher percentage, but it's usually no more than 20-25%. We're still letting you play with house money there. But there's no it's only on incremental value. So we don't charge for what you've already filed. That's right. Yep. No, that's great. That's a really good point. And we used a really big company like to do this for us. It's not like we found some Joe Schmo. Like, we used an industry standard sort of company to calculate our ERC for us. And I'm not mad at them, but they did not maximize it for us at all. And you were able to. So, thanks. I appreciate it, man.
Anytime.
Yeah. All right. Well, I think that is great for today. I'm sure we'll do this again and talk more about it. There's a lot of information out there. I want to get people super comfortable with this sort of thing. I hate the idea of people leaving money out on the table, especially because all these huge companies are taking this too. We want to help you guys get some money. We want to help some clients get some money from the government because their companies were affected by the pandemic, so that they can grow and just do the things. It's already your money. You just got to go get it,
Yeah. Not just get it, but feel comfortable doing it. Want to help you sleep easy at night so you can focus on your business. So we're looking forward to it.
Cool. Hey, thanks for your time, man. I'll talk to you later on.
See you, John. Bye.
All right.